All right, welcome back for the episode of This Week in Charts via Conover Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on ConoverTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So, long 3-day weekend here, so markets are closed. Doing this video today, Monday, Martin Luther King Day. Markets are closed, futures are open, and you're going to see here that we're basically just flat, which is totally normal. That minor green, little tiny green candle there intraday. And again, markets here this week, we talked about a possible, I think I said a low by Monday or Tuesday, and we had the low on Monday morning. So I've been kind of in the camp that, we'd get a pullback here in that first week or so of January, and then we would see something of a January effect, right? So we have a big up move really all year long. You have a big up move. There's going to be fresh money coming into the market. There's going to be sectors that are beaten down that you're going to see rallies in. And we're kind of seeing that right now as you saw the low on Monday. And then we kind of just rallied right back up. Or I should say rallied the low on Friday, but we did have the power move on Monday. And then we did just kind of float higher throughout the week, kind of printing higher lows. And we're just continuing to hammer. We did actually finally crack that 4,800 handle on the SPX. So that is a psychological level there. We did not close above it, but we did have a new all-time closing high on the weekly. So not a new all-time high nominally, but a closing high on the weekly. You see there, 47.83. And then the previous before that was actually the end of the year. So in any case, markets are just continuing to hammer on that level. And you guys know my thoughts on this. I do think we have to at least slice that all-time high at least once before any sort of major downside kind of comes into play. Although I am expecting some sort of a pullback here in kind of quarter one. You guys know my thoughts on yields there, which we'll talk about a little bit more as we get into the yield charts. But again, markets here continuing that January effect here in the short term, and I still think there's a little bit of time on the clock left for this rally. How much longer can it go with with all the macro pressures going on right now? The Red Sea, there's a lot going on there, and there's a lot of Treasury issuance set for quarter one as well. So there's definitely some headwinds. We also have reverse repo. BTFP set to run out in March. Obviously, that is not going to affect the markets in the short term, but just some other challenges that we may have to face here in quarter one. But either way, markets did float up here, and again, we're going to give them the benefit of the doubt until we get a high volume sell off or some sort of sell signal here. But right now, my kind of bias is that we chop around here and push into that all-time high, and we'll kind of go from there. Spiders here, so having a good week. If we take a look at the triple Qs, also having a good week. Did not take out the high, so the SPX did, but the triple Qs did not. Remember, the Mag 7 had that bigger pullback, right? We talked about this. If you had Mag 7 last year, a lot of the, generally not always, but a lot of the time, market participants will hold off profit taking until the first week. That way, they don't have to, burden themselves tax wise, so soon. You only have a few months left before April. And they can kind of, push that off till next year. So Mag 7 did see a pullback and then, kind of right back up there. So triple Qs did have 5 green days this week. So 1, 2, 3, 4, 5. And actually that makes 6 in a row because we did put in the low on last Friday. Obviously, short-term double top would be your little resistance there. And then if we take this low out, there's still a lot of support around 388, 387 here in the near term. There's also an interesting little line here I can draw in. I don't love upsloping trend lines like this, connecting the highs, but sometimes they do work out. And you're going to see here, if we just connect that, you can see that, maybe that could be an area. I talked about the spiders a minute ago. Do we need to go kind of, again, going back to the SPX, do we need to just make a new nominal high here, right, before the markets pull back? Well, maybe the Qs, maybe that could coincide with this level here on the Qs, right? It's not that far away, and neither is the all-time high on the spiders. Only about 30 points or so away on the spiders, or on the SPX rather. So those levels certainly could line up there, but just something to keep an eye on. But right now, Qs are okay, and they're in decent shape right now. The IWM here, that was interesting. So on Friday, we had a pretty good gap up, and it was actually leading the markets higher and actually rolled over and closed negative, down 32 cents on Friday. This could be setting up, and the Russell's had a huge move, right? It went from basically 160 to 205 in 8 weeks? 3, 6, 9 weeks or so. And then it's got to pull back here, right? So it does look like we're trying to put in some sort of zigzag down, possibly into like 185, 187 area on the daily. So the Russell does like it's a little bit ahead of time here on correction wise. But right now it did pull back in off the highs. And again, this isn't the worst thing ever, right? Again, this is 160 here to 205 in a very short period of time, right? So this is going to have to come back in. And usually when you get a move like that, you're going to get some type of zigzag down. And really the nearest area of chart support is right down here around 185, 187. So that certainly could come into play next week. Remember, we do have options X next week, January. Lots and lots of premium expiring. So expect some game playing. I wouldn't expect any sort of breakout or breakdown necessarily next week, but we could see a lot of whipsaw and a lot of volatility. The diamond here, so the Dow, again, kind of a little bit more of a muted rally this week. So it was up Monday with everything else and then kind of just sideways, actually finished below Monday's closing price. Still up for the week, but below that power bar from Monday. The Dow here is still above trend. So these moving averages are still spaced out nicely and they're trending up, and prices above all of them. But this is very top heavy. I wouldn't rule out one more kind of push here, but this is starting to look, specifically the Dow versus the other indexes, this is looking very, very, very top heavy. It has kind of that rounded top type look here. It's a little immature, but I could certainly see that, coming into play here over quarter one. Again, I wouldn't rule out one more kind of like maybe mini blow off push, but this is looking a little gassed here up at these highs. And I think that any sort of breakout attempt on the Dow probably fails, before long, if it does try to push up. But again, right now, it's technically safe, and we'll give the market the benefit of the doubt here as well. SMH here, so semiconductors. Again, having an up week, they did take a pretty good slice. Again, remember, Nvidia was very weak the previous week. This makes up a large portion of the SMH. And again, Mag 7, right? This was it gained like 500% last year, right? So you're going to see that profit taking come into play first 2 days, and now it's just pushing right back up into options X. But SMH here holding up here. I think this could have one more push. Maybe one more zigzag. You got kind of a minor, mini little bull flag there. So nothing to say we don't push up one more time. But again, semis, like a lot of things, looking a little top heavy. But again, doesn't mean they can't have one more push. Same thing with the socks here. In fact, I like this bull pattern here on the socks a lot better, nice and tight and upright. Resistance here is right around, you've got the gap fill and 4,200. If we somehow manage to break through those, again, 4,300 is still a target that I would have. The IGV here pulled back pretty sharply again last week, and then we're right back up 1, 2, 3, 4, 5 green days in a row, and now right into double top there on the daily, and you're going to see there on the weekly we're still just kind of hammering here on this area. So again, cloud software still remains strong. Basically a 2-week pullback, if you want to even call this one a pullback. It barely was. A cloud software holding up. If double top holds, there's still support at the gap fill, which we did not take out, and if we get through that, it is down to 367 for the IGV. Dow transports here were definitely on the softer side, so it hasn't been a super broad-based rally this week. It was very, breadth was pretty thin. I was watching AD all week, and it wasn't the greatest. So transports here kind of look like the Russell. Again, we had this big up move, pullback, and now almost kind of bear flagging here, right? So inside of this range. So it looks like it's setting up for a zigzag type move down. Still a lot of support around 15.2. And then a lot more around 15 even. But right now, transport's pulling back after a big move. If they start to break up, you need to get above this red bar here. So, right around 15.7. A close above that would definitely repair this chart here. But transport's definitely on the weaker side. We did have earnings out of Delta. That stock got hammered on Friday. We will have a lot more coming up this week as we get into the heart of earnings season here. All right, so let's get over here to interest rates. So again, here's the 2-year. So again, 2-year, we're just kind of chopping around and then started to break down Thursday and into Friday. If we take a look at the yield curve 210 spread, only inverted by about 20 basis points now. So that's not the highest in a while, but it's the highest since October. And if we were to get above that, it's likely we would, it would not take long to get back to parity. So everybody's celebrating that. The one thing I would say, though, is the 3-month and 10-year is still way inverted. So it's barely even upticked. If we look at the 3-month, this has just been a barcode here, since May of last year. And the 1-month, same kind of thing. So up into May, little pullback, and then it's just barcoding. So the 3-month, that really extreme short end is not budged. Even though the 2-year is starting to come in, I guess in anticipation of Fed rate cuts. I don't have enough time in this video to get into all that, but I just don't think that the Fed's going to be able to cut like they think they will, but or at least the market thinks. But right now, yields coming in. The market does like that, and the positive is the Fed funds rate is well above the 2-year yield, so they do have room to cut technically. But right now, that extreme short end here is very stubborn. But 2-year here into a lot of chart support here around 410, 415. 5-year here has a lot at 370 to 375. And the 10-year here right around 370, and the 30-year around 3.8. I don't know if this long end even gets down there. I think the long end may have bottomed here. It's certainly possible they could inch a little bit lower, but I don't see a ton more space to move down for yields right now. But they did back off this week, and again, we'll just leave it there for now. XHB here, again, up for the week. It did pull in pretty sharply on Friday, down 81 cents, but again, trend is up. It's still fine for now. And again, it's going to take a broad market sell-off, I think, in order to take this down, or yields really starting to surge, which is ironic because the home builders have held up with strong yields before this year, and even last year. But I'm certain that this entire rally here is based off, predicated off the fact that the 2-year and even the long end has come back down quite substantially, so you could see some repricing there if yields do spike like I think they could. VNQ here, again, just kind of in a range. This is not a bad pullback pattern here for the VNQ. If you look on the weekly, you got a weekly bullish inside bar, so nothing really terrible. We could even go down all the way down to 83 and change and still technically hold this green bar low. And if you can consolidate, it could move higher in due time. So nothing terrible there for VNQ. I think it just needs to let these moving averages kind of catch up. But again, we talked about this, weekly resistance, right? 100, 200 MA, we went up to it in a straight line. It's going to take time to get through that. If this fails and we break below that green bar on a weekly close, then there's big trouble here for the REITs. But right now, pattern-wise, it's still holding up okay, and we'll give it the benefit of the doubt. All right, one sector that I do think looks very top-heavy is XLF. So again, we are above trend here. Again, nothing terrible, but this is starting to really, it looks like the Dow is really looking like a rounded top here. I think there's a really good chance that JP Morgan is topped out. They did report earnings on Friday, and they made a new all-time high intraday, but they got, this was the definition of a gap and crap here. So when you come up and you run up into earnings and then you gap up and you surge like that, there's going to be smart money taking profits usually, and I think that's what happened here. If this does inch down, you don't really have support until like 155, 160. So this does have some space to correct here. Banks, again, running up into earnings. Citigroup was able to hold up. Wells Fargo, take a look here. We lost that green bar low on a close. That's not a good look for Wells. Bank of America was able to hold up a little bit, but definitely seeing some profit taking here. Coming to these bigger banks. Goldman, pattern-wise, is still okay. Morgan Stanley is still okay, a little bit on the weaker side, but bank earnings weren't all that spectacular. And JPM, that does look really top-heavy to me, so I would be careful with the fins here. Again, doesn't mean we can't. I've been hammering down this 38 and a quarter area. We could gasp up to that area, just like the like I mentioned on the DIA, but that's kind of all I'm seeing for it right now. So again, be a little careful here with the banks if you own them. I would look to trail stops here. KRE, again, continuing to pull back. It's imperative for it to hold this kind of area here. So you got this pivot high around 49 and change, and this green bar here, 50 MA. So there's support here. And right now, this is just a pullback pattern, but you don't want to see it start to roll over, and you definitely don't want to see it lose that green bar low there, as that would be a big sign of weakness for KRE. If not, it can still go up to 55, 56. So again, still just a pullback pattern. I'm neutral on it right now. Same thing with KBE. This can still get to 48, but you want to see it hold these support levels here. Otherwise, the charts could be in much bigger trouble. XBD here, a little zigzag down. Support is at 520. If it gets there, I think it does eventually. That also looking a little lofty over the last couple of weeks. All right, let's get over to energy and commodities. So crude is actually trading right now as I'm doing this, although I think the futures close in a few minutes. But anyways, we had a nice pop on Friday, and then it came right back in. So I am like very neutral on crude right now. We are in a wedge here, which I mean, there's only so much space left, right? This is gonna have to make a decision by OPEX, right? This is the 19th. There's your OPEX red line right there that tells you that. So this is gonna have to make a decision within the next week. Does it break down? If it does, it's probably headed down to 66 and then 64. I think those are potential buys, but we'd have to see how it gets down in there. And if it pushes up, and I mean, that 75 handle, look how stubborn it's been. We got up there a few weeks ago. We tried to get up there on Friday. It just couldn't get above it. So the oil shorts are in control. And this is with news right out of the Red Sea. So they're in control of it. If they lose control, it can go up to 80 very quickly, though. So, and there's a lot of oil shorts, too. So just be aware of that. Right now, I would be neutral. And also, one thing, when you have a wedge like this, I would not trust the first break of it. Again, kind of like right here. We had a break and then it came back in. I don't trust it until it shows me that it's ready to stay below that line, because you get a move down here, we close down there, and then shorts jump on. Then all of a sudden, maybe double bottom holds and it does one of these. I've seen stuff like that happen all the time. So when you have these symmetrical wedges, very important to look for signs of confirmation and stuff like that. But right now, crude is neutral to me. I think it heads up into quarter one, but again, this is just speculation. We'll have to just let the market tell us. So, anyways, XLE did get a little bit of a bid on Thursday, Friday. It came off the lows there. I still think that this has one more drop, possibly into the upper 70s. XOP is holding this trend line, so that's a positive for the XOP. If it does head down, there's still a massive ton of support here around the 120 handle. And then the one I really like, and I'm rooting for this to get down here, is the OIH. I want this to get into this area here, 275, 280. I think that is a buying level. I would really I would like it to get down there quickly, because that would make the level more major. So that is a level I really like oil services at. Anyways, all right, let's get over to everybody's favorite. So CCJ up 7% on Friday. Again, I think they've reported that they're not even going to come close to their production quotas, and these uranium companies just took off, and they've been taking off all week. Somebody probably knew something ahead of time. As you can see, look at how these wide range candles before that news broke. But there's the weekly up move, pull back, and just an absolute monster surge here. So we talked about $50 if it gets there. It stalled out in December, and then obviously we're there now. Just again, be aware it's parabolic. I would not chase it up here, but you're kind of going into these levels here. We'll say 52, and then obviously 55, your double top, 56, your double top is your next area. Very overbought, very extended, but trend is up on the weekly. It's really the monthly that is the problem. The URNM, I've been telling you guys about this for weeks and weeks now, so hopefully you guys are listening, because I've been saying, look at this pullback pattern here. That's a bullish inside bar on the weekly, and it is very strong. So you've had 3, 6, 7, 8 weeks. This is free information I'm giving out too. 8 weeks if you wanted to play this, and take a look here. 47 to 56 in 5 days on the URN, actually 4 days on the URNM. So massive move there, and I've been very public about liking that pattern on the weekly. All right, nat gas here. So that continued to surge up on Thursday, Friday. Polar vortex, all that stuff. It is pulling back in. That is totally normal. Today, we'll see if this can base here. I think this can push up towards 360 and then 4. If it comes back down, you have a little support around 270 and then 260. So nat gas having a big move off the lows. It's mostly front contract driven right now. So there's a big spread between Feb and March contracts, but the price is acting well, and if this just consolidates in this range, it can build another base for another potential move here. All right, flipping over to the dollar index. So the dollar held up well all week. So again, this pattern here is not bearish. So we have an up move, and you're just consolidating beneath resistance. It tells you it likely wants to go higher. And a lot of market participants are a little baffled by this because the dollar has held up well. The markets have gone up as well. And again, this is going back to the January effect. There's I can't describe to you how many billions of dollars are coming into the market right now. So this can get offset. Yields rising and the dollar rising can get offset by just new money flow. So just be aware of that. If the dollar starts to push up, it doesn't necessarily mean the market has to go down. Eventually it will, but right now the dollar here at face value is coiled up, and I think this pushes up to 104, 104.35 again. Does it go in there in a straight line? Probably not. You probably stall out at 103.50, then you can get up to 104, 104.50. But yeah, nice pattern there for the dollar, and it is holding up well right now. On to gold here. So gold had a very choppy type of week here. So again, just a lot of chopping action today. The market is open, and it's just hanging in there. Nothing terrible. The weekly chart looks very good. I think it needs to do more basing, but right now there's no real problems with it. If this does pull back here, if the dollar starts to put pressure on gold for whatever reason, you're looking at 1950, 1960. I still like this trend line here as a possible stopping point, but gold is, it's holding up well, and, the miners are holding up well also. They did back off this first week. As you can see, the GDX there, I did get a bid on Friday, so if this continues to firm up, that would obviously be a good sign for gold futures and precious metals. Silver here is a little bit on the weaker side. So we had a big high and then a lower high here, and now we have technically a bearish inside bar. I think this wants to go test 22, and then possibly even down to 21. A lot of people are calling this a head and shoulders here. You can. I mean, there's nothing to say that it can't be. I think it's a little steep of a pattern. I don't like how steep it is, but you could make a case, and if that plays out to target, I'll tell you right now that I would be buying as much as I can. So I don't think this stays below 20 very much longer. But technically daily, you do have a bearish inside bar. It could come in again. They tend to hit the metals a little bit during OPEX week, and might not be an exception here as we get into next week. Platinum continue to pull back. I like that around 900, 910 on a pullback, and that's simply just a 618 fib. And it's basically right there, but you could get a little bit of a pierce of that. I wouldn't rule that out on Tuesday. Palladium continuing to pull back here. I like that at double bottom, but I do think the macro low is in play for PA futures. Copper here pulling back again this week, and got a little bit of a bid here today on Monday, trying to hold 375. If it gets through that, 370 will be support, and then your next big level is down at 360. For copper futures, but yeah, copper definitely pulling in off the highs. Thought it might had a chance to get up to this pivot around 4, but never quite got there, and just kind of trading sideways to lower right now. All right, so Bitcoin here. So this is definitely at this point some type of sell the news, right? So we talked about that possibility for weeks, actually probably months, honestly, and it happened exactly like I thought it could. You get an initial pop on the ETF news, right? It got up to 49,000. By the way, that's just, simple. That's just a perfect hit, right? So right into that pivot. And then you get initial pop, and then it comes right back down. We have done some daily chart damage. And what do I mean by that is we've closed below the 50 MA. It's not the end of the world, but technically that's your first close below the 50 MA since September. And you took out this green bar. So you have a bit of an outside move. So inside, 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 outside move, right? And if we look on the weekly here, you're going to see that this is actually, so this is the positive, this is actually holding up. Like, yes, we do have an outside, or an attempted outside candle that failed, but if this just consolidates here and the 20 MA can catch up, this can still go higher, believe it or not. In order to negate that, you need to get below 40,000 on a weekly close. If that happens, then Bitcoin's definitely in corrective mode. So that's what I would say for Bitcoin here. Ether did get a nice outside bid, again, kind of in sympathy, like, oh, now ETH is going to get their ETF. But Bitcoin definitely did. It is definitely is a sell the news here on the daily. One other chart I saw that I thought was interesting is this right here. So Bitcoin futures launched in late 2017, and then it came down pretty sharply. We had like a 3-4 year correction. The ETF, the futures ETF, that's or was a BITO, launched right here, and then we had a 2-year correction, and now the spot ETFs. Does history repeat? Very interesting. So again, there's nothing to say that this has to repeat, but there are some talking heads and stuff like that I think are respectable, saying that we might need to correct this move. I think it's certainly possible, right? And if we do come in, you'd be looking at about 30,000 to 32. Those would be kind of your big macro levels. But right now, there's nothing on the weekly saying that this can't just consolidate and push higher. But I thought that chart was interesting. So if we do go into corrective mode, we will look for 32.5 to 30,000 as your big levels there. Anyways, so markets here again. Remember, OPEX next week. There's lots of earnings coming out, and it's going to be more and more. And then after that, we do have the Fed coming up towards the end of the month. Obviously, that's not anything we need to worry about just yet. But right now, kind of giving the market the upside bias here, just to that all-time high, and then we'll kind of see how the market trades and reacts to earnings as we get into the heart of earnings season. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.